Hey guys, this is Vishal from Uncharted FX, and what a week we had last week. So Monday started off with this large sell-off, and we hit support zones or a flip zone that we were looking at last week. And then from there we had subsequent days of strength, or as some people might be saying, pullback. So we're at a very interesting junction for equity markets. And before we talk about this, let's quickly look at the economic calendar and talk about certain geopolitical news events or just news events that happened last week. Today, well, I'm recording this on Saturday, May 18th, but there is a Aussie federal election, some preliminary data, which we'll ignore. Monday, there's a Powell speech, and also for my Canadian friends, yeah, it's a long weekend, Victoria Day. On Tuesday, we have the RBA meeting minutes. We have Governor Lowe speaking. We have New Zealand Q1 retail sales. Wow, okay, so consensus is supposed to be 0 for Q1 retail sales in New Zealand. Wednesday, we have British CPI, so inflation data for April. We have Canadian retail sales on March. We have, so this is going to be a big one, the FOMC minutes. So essentially this is going to be people gauging whether the Fed is making decisions to cut rates, stay patient, etc., etc. So this has always been sort of a market moving event recently. Preliminary data on Thursday, and then Friday we have US non-defense capital goods orders ex aircraft for April. So quickly on the equity markets, last week there was a lot of talk. I mean, everything is about the China trade deal, but you heard Steve Mnuchin talking about how, oh yeah, I'll be going to Beijing soon, but don't know when. And then on Friday, the last day of trading, on the last couple hours of trading, it was announced that a trade deal has stalled with China. So not good news to end the week. However, it is setting up for President Trump. It's setting up good for one of his tweet storms. So there's a saying right now that one tweet a day keeps the bear market away. And you can be assured that sometime next week, President Trump will put out some sort of tweet saying, hey, look, I just got off the phone with President Xi, or deal is looking good, or talks are looking good. So it'll be interesting to see how the market actually reacts to that. But that'll be a wait and see. But I'm quite sure that will be coming out this week. It's just the setup is just too perfect for that. But let's take a look at some of the markets here. So on the daily chart for the S&P, you can see I drew a Fibonacci here. And I did that just because there's a big flip zone area here, which will be more clear when we go down to the 4-hour, but I just want to talk about the daily chart here quickly. And at the flip zone, we also have the 61.8 fib. So the only reason I want to talk about this on the daily chart is you can see that in this downtrend, we really haven't created a lower high yet. Some may argue that this candle here could be a lower high. I don't really think so. Which means in a downtrend, we could still potentially make another wave lower to 2760 and even 2707. Again, this is the big zone right here, big support zone. Let's call it like the 2800 level. So that would be the more conservative entry. Wait for a break there. But you bet a lot of people are watching price action here right now. So let me go down to the 4-hour and you'll see why. So you can see here, it's been a nice flip zone. And also this was a lower high that we've been maintaining throughout this entire drop down. So again, just basic market theory, as long as we're underneath this lower high, we're technically in a downtrend. You can see here after this nice trend down, we did start making some swings, higher lows here. So what I'm watching for is if we do break above this, let's call it 2890 level, we can potentially see further upside from that break. However, right now I'm not doing anything. I'm just waiting to see what will happen. If we get a nice strong break above here, then I expect will probably likely continue into all-time highs. However, if we do create some sort of rejection, maybe even watching this zone here, if we do break below here, then there is further strength to the downward side. And of course, this is why a lot of people are actually using this, the 61.8 fib here on the daily chart. So it'll be interesting to see how the daily candle closes as well. Again, a lot of the other equity markets, very similar. NASDAQ, Dow Jones, similar to, I mean, this one, it's probably not at the 61.8 fib, but similar sort of charts where you can see on the 4-hour, we're about to make some sort of bottoming pattern here, perhaps, if we do break above here for the Dow Jones, the 26,000 level. NASDAQ, same sort of thing. I mean, this one looks a bit weaker, but all these equity charts are pretty much displaying a same sort of pattern here. The Japanese Nikkei on the 4-hour, nice looking pattern as well. Nice downtrend we have. We have a bit of a bottoming. I'm watching this 21,400 zone to see if we break above for a move higher. One thing to note is that the Chinese markets look much more weaker than American and European and Japanese Western counterparts. You can see here, nice downtrend. We have not made our first lower high yet. This could be that first lower high, which would be confirmed with a break below this lower low here. So this is the Shanghai Composite. I don't trade that. I trade the Chinese 50 and the Hang Seng. Similar thing here. Nice big red candle. If you fib this zone, I'm pretty sure we're probably at, okay, like the 50 fib, not exactly the 61. If we do the whole move, yeah, at 38.2. But this big red engulfing candle is a bit more indicative of perhaps a continuation lower. And again, just using basic market theory, this looks good. So if you guys remember, we're looking at this area here, a bit of a head and shoulders pattern. We had the gap down, but a gap is a very strong bearish indicator, or bullish if it's a gap up. And we came back to retest sort of that zone. You know, that's why I call it zones, because it's not one price but an area. And perhaps we'll reject here and continue lower. So the Asian markets, the Chinese markets, looking much more weaker compared to their Western counterparts. Hang Seng, same sort of thing. We had a bit of what looked like could be a bottoming pattern. And see, this is why I wait for breaks, because if you don't get a break, you can get something like this, right? Where you get a rejection. So patience is the name of the game. Same sort of thing. Nice downtrend. We have not even made our first lower high yet. So you can see here, you know, when we have an uptrend, you have swings, right? Lower highs, sorry, higher lows, higher highs. We have not done that yet with the Hang Seng on the daily. So I'm watching for that. The French CAC 40, same, again, similar to the American S&P and the NASDAQ. We had this break, hit our support zone, came back up, and I fibbed this just to show, you know, where we are in terms of the fib levels. But on the daily, we haven't made our first lower high yet. Potentially can make that here. And again, using the 4-hour, well, the daily, you could see a nice flip zone anyways here. But here's a flip zone that we're playing with, very nice and well defined, being support and resistance. And you can see we're testing that area again. So what I'm watching for again is if we see a break above, a really strong break, then we could perhaps continue. If not, then maybe see if we'll continue this pattern here. And interesting enough, it looks sort of like a head and shoulders here. If we can create the right shoulder. And the French 40, by the way, it went up to almost test all-time new highs. So it's interesting where the bears came in. Euro stock, so this is the Euro 50. It's a bit more interesting in terms of it's already broken above what I would call a major flip zone here. And now it's just to see if we can sustain this movement. So if I do see a break above 34.50, then I can see sustained movement higher. So this actually looks better for more of a bullish case for equities. So let's see what happens here. And finally, I also have the Aussie 200. I'm just covering this because We actually did break all-time new highs, pulled back, and now we're back and testing those levels again. We have not closed with a candle close above it yet, but interesting chart nonetheless to see if we do make all-time highs or if we turn and perhaps bounce around here for a while, and then eventually would be nice to see a break below 62.30. So that's the trade. That's my idea. If we do break below 62.30, I would short. But you can see nice zone here being resistance support. It's a swing zone, a higher low swing zone. So let's see what happens here. Oil. So oil charts. To be honest, it's not the best swings that I like to see. I mean, I like to see more of this type of, more clearly well-defined swings. This one, I mean, we do have lower high, sorry, right here. So we do have multiple swings. The 62.50 zone was an area a lot of people were watching. We did break and then we got rejected. And then you could see after this big red candle. So this is where sort of psychology comes into effect here. Big red candle, you would expect a continuation of selling after you get this big red candle, but what we did is we closed that candle. We ate it all up after a couple of days here, but we closed above it, and now we couldn't break above the 63.50-ish 40 zone here. Again, what I'm looking at though is after this break here, we haven't made a higher low yet. So I'm watching this sort of 62.50 zone as like an area to a line in the sand, essentially. So I'd like to see maybe some sort of higher low form. And remember that higher low is only formed once we break above this swing zone here. So there's a lot of geopolitical things. I mean, there's this talk about this Iran strike, which will possibly happen. And in my blog, I discussed a lot about how the Saudis are very angry that Iran are stealing their customers due to, accepting oil for any other currency except the dollar. So a lot of Iran's customers, a lot of Saudi customers from Europe, from Japan, South Korea, Turkey, India, and funnily enough, the UAE, so United Arab Emirates. They're buying Iranian oil just because they don't need to pay American dollars for it. In some cases, like Turkey and India, it's really important for them because their currencies have been getting decimated due to the stronger dollar. So as the dollar gets stronger, I think more nations will see this as beneficial for them, which means the Saudis will be losing market share. And really the only thing they can do is say, okay, you know what? We'll also accept any other currency besides the dollar. And of course, that wouldn't be too good with the Americans. Of course, there's that petrodollar system placed between Saudi Arabia and America, which goes back to Henry Kissinger and King Faisal. So right now the Saudis, though, they have a good say in dictating American geopolitical and foreign policy. So I think they want something done about Iran. The Americans also want something done about Iran because they see it as this node to Russia and China, as a way to not only de-dollarize, but to take it, damage American dollar demand. And Venezuela is also a key for that. But I think Iran is, just because the Saudis are in that area, there's a bit more urgency to deal with Iran because the Saudis want it as well. And the Americans have to sort of appease the Saudis. One, for the Saudis losing market share, and two, you can sort of see the Russians are getting very close with the Saudis, especially President Putin and Crown Prince Mohammed bin Salman. And the Americans have shown and talked about how they don't really want Crown Prince Mohammed bin Salman to be the next king because he's a young guy, I believe like 33, 34, and essentially if he's getting close with Vladimir Putin, he could be talked or encouraged to drop the dollar and swing more to the eastern sphere. So watch what's going on there. There is a big supply glut of oil, so we keep getting bigger inventories. So if supply is higher than demand, you'd expect prices to fall, but we haven't really been seeing that recently. I mean, with this price action, Actually, you know what? Maybe this red candle was that fall, but we still was sorry from that news, but we still have been shooting higher, and it could be because of geopolitical tensions. So watch this market; it's very interesting. Of course, the two largest components for the American stock markets are energy and financials. Both are technically interlinked because a lot of the financial banks have been giving loans to these oil companies when oil hit, like 30 bucks back in the day. Sorry, yeah, well, just 20, 26, almost 25 back in the day. So a lot of these oil companies are doing very poorly, and these banks have given them loans, and essentially they have to make sure these oil companies stay afloat. So it's in best interest for oil to go higher to keep the banks and oil companies doing well, but again, it hurts the consumer. And when President Trump talks about tax cuts, all of that is really nullified if prices of goods keep going higher due to, say, tariffs, and if they're paying more for oil and gas for their vehicles. So very interesting watch. I'm not going to be talking too much about the gold and silver, the precious metals here. Just ugly charts. I mean, silver, big supply break here, support break. It looks like we are going to the $14 level. This is just a bit more interesting for MBB because a lot of silver miners probably aren't. Well, they're hurting. Let's just say that they're hurting. So it'll be interesting to see what happens here. I mean, silver shouldn't be like these silver miners can't really sustain at, say, $14. I've talked about how the environment right now for funding and for raising capital in the mining industry isn't the best right now. So interesting, but let's see what happens. I was always thinking that there is one more downside for precious metals before we see the eventual spike. In terms of geopolitics, where we are, I think maybe more around fall is when we'll start to see more issues. Copper I have on the list just because we are at an interesting support level. We've had a nice downtrend. Nothing yet to indicate we're going higher, but perhaps we might base here for a bit before breaking higher. So I'm watching copper. This is a chart that a lot of people should be, well, I don't want to say worried about, but the dollar looks like, well, we talked about this level, this zone last week. It looks like we've held, waiting to see a break of this 98.20 zone, which will confirm this as a higher low. And the next area would be the big 100 level, big psychological number for the US dollar. Again, if you follow my work, I'm expecting the dollar to go higher, and when that happens is when all these issues will start happening. All the problems get exacerbated. So it looks like all this stuff is happening. It's coming true, so just keep an eye on it. Be prepared. But I expect people will run into the dollar. And I was actually listening to the Macro Voice podcast last night, and they spoke about the dollar is going higher, equities are going higher, and bonds are going higher. So what's going to give out of all those three? I mean, we never see that happen. There's a good case stocks will go higher just because there's a lot of money that's not into the market. They're on the sidelines just waiting for the right time. Bonds, it looks like interest rates will be cut to zero, or go lower, and so which means bonds will go up due to the capital appreciation. And it remains that the dollar is the one that will get the hit. So a lot of people are claiming the dollar will take a hit once the Fed starts to reverse policy and start cutting rates. However, I still think there's nowhere else to go in terms of Western currencies and economies. Like the US looks the best. Martin Armstrong talks about how the dollar is the prettiest sister of the three ugly sisters. There's just nowhere else to go. It is the reserve currency. A lot of European money is leaving Europe and going into America, which means they have to buy the dollar. So there's a lot of backing for the dollar to go higher because the demand is still there. So very interesting. I'm expecting the dollar to go higher, and as it gets higher and higher, I sort of get worried because a lot of my geopolitical analysis means it's coming to fruition and coming closer. US Swiss, I have this. So we were watching this zone that we broke. We haven't made another higher low yet. Sorry, lower high. Could be happening here. I'm waiting to see if we get a break below this 105.58 zone. But there's better setups to look at. But I just want to see if we can actually maintain this break of this big flip zone here. Euro pound. This is more of a mid-trend entry. But this was a good entry we took last week. Break here on this, nice downtrend move. We bottomed for a bit, and now we broke. So what I'm expecting now, though, is some sort of pullback or higher low. Because remember, in an uptrend, we need swings, or what I call waves. So that's what I'm waiting for. I'm expecting, look at how many green candles we had in a row, and this is the daily chart. So for more than a week, we had subsequent daily candle strength. I'm expecting some sort of pullback just to form a higher low for me. And again, it's more of a mid-trend entry. It's not an early trend reversal entry, so be cautious, but that's what I'm expecting. US dollar, so let's just start here on the daily. Big flip zone here that we broke and closed above, but this looks better on the 4-hour. A bit of a bottoming pattern here, and you can even call it a bit of a head and shoulders here, although it's not the best looking. But you can sort of see here we're sort of transitioning from making lower highs and lower lows to higher lows and higher highs. I'm watching this zone here at 110.05, let's call it, but it might be more prudent just to watch this 110.20-ish zone break first. So this is more of a wait and see approach. Let's see what happens with a lot of these yen pairs. Aussie New Zealand, so this is what we talked about this last week as well. We had our support break. Unfortunately, we didn't continue momentum, although we're still holding this zone. So this candle here break, we're still holding it. Had a nice big red candle rejection. Now I'm just being patient, wait to see if we close below 105.20, and we'll see a nice continuation further down, perhaps even to like 104.72 or 104.50. So still a good valid setup. Euro yen, showing signs of a bottoming. We haven't bottomed yet, but it's showing some signs. This could be our first higher low we could work with, but that would need a break above 123 here. I would rather, there's a big zone here at 123.40, which has been a flip zone here. So I'd rather see this area maybe be taken out first. So this is interesting, keeping it on the radar. CAD Jappy as well. I like this pair more. Maybe if we do see some oil strength, subsequently, like usually oil and the Canadian dollar are linked together, not always, but there's a good correlation. So if we do see some higher oil prices, which would mean higher equity prices, which also mean higher, the yen pairs don't do, like they'll go a bit higher. So from here, maybe this is our first left shoulder here, a bit of a head. We could be making some sort of right shoulder here. So watching this, there is a gap here to be, you should keep an eye out on, maybe take your first profits there. But CAD Jappy is one that looks good. I'm not really going to talk about Swissy too much. It's just we're at a big sort of area where we broke below. So if we do see a big break above that, then it's quite indicative that we might be canceling or we're seeing a bit of a bullish turn. So not the best looking pair, but I'm just watching it because we had this nice break here, and you can sort of see there still are levels up ahead at like say 109.50, but it's something I'm keeping an eye on. We've been holding this area 108.40 for quite some time. So as long as we're above that, we can break higher. If we do break below that, then perhaps you can even look at a short. And quickly, Aussie yen and New Zealand yen. Just watching it because we're at a nice big support zone for the Aussie yen. We haven't made a bottoming yet, but I expect maybe we might see some sort of bottoming pattern here. So I'm watching this to see if we create some sort of bottoming, maybe a inverse head and shoulders, double bottom, something like that. Same thing here with the Kiwi. It looks like it's sort of becoming to range, but again, wait for the pattern, wait for a bit more context for this trade. Euro New Zealand is one that a lot of people have their radar eyes on, or it's on their radar. Looked like we were going to make a double top here, but we did continue a bit higher. I'm watching this 170.30 zone, let's call it. What's interesting is that this is where a lot of bears are. You can see we had a big spike up and immediately got sold off. So we could still approach that zone before we go lower. So this is a trade that requires maybe a bit more patience. Even on the daily, big supply zone here at 172. So just be patient with this one. If it goes higher, it goes higher. You know, there's plenty of other markets to look at. But this one, I'm waiting to see if we do break below 170.30, let's call it. And then we talked about pound Aussie last week. We did get the break. However, there was Aussie data that came out. Even though we stayed below the lower high here, we had this big wick here, which could have taken a lot of people out. Mostly due to Aussie employment numbers again, which came up worse than expected. But then we immediately sold down, created another lower low here, and you can see we're still maintaining these swings though. So what I'm waiting for is a break of, let's call it the 108.85 zone here. If we get a nice break here, perhaps we can see another good continuation to, let's call it the 182 zone here. I am maybe a bit worried about this area here, as it's been a bit of a support zone, flip zone here in the past, but we'll play it candle by candle. Finally, I just wanted to talk here about cryptos. So Bitcoin, we talked about this last week. We had two areas we were watching. One was this 84.50-ish zone, I think it was, and then 10,000. We are getting some resistance here at the 84.50 zone, and on the 4-hour, this was during midweek, I saw this, but saw a bit of a double top here, and then we got a subsequent break. So looking at this chart on the 4-hour, I'm expecting one more lower high, which means we can possibly still continue lower. So, you know, we've had our swings, higher low, higher high. You can see here, you know, multiple swings. We haven't had our first swing yet, so I expect one more lower high, which will create a lower low. But until that happens, I don't trade Bitcoin. By the way, I just hold certain other coins, but looks interesting. A lot of people are talking about why this went up. And I've talked about this in the previous blog post and previous video about Kyle Bass's theory on Chinese communist members using Bitcoin as a way to hide money when there's a devaluation. And I think it's interesting because the prices started to spike on Friday when there was when we knew that there was going to be no deal, right? So perhaps a lot of these CCP members knew before in advance what was going to happen, and put some money into cryptos. And I'm hearing too that in China it's quite bad, or the environment, their economic environment is bad. A lot of people are trying to get money out of China again, and due to their capital control restrictions, you can't just take yuan out of the country. I think you're limited to like 50K a month or something like that. Don't quote me on that, but something like that. So, you know, cryptos is a way to hide money and get it out of the country. So I'm hearing a lot of talks about that. Again, you know, I don't really pay too much attention to the crypto market, but just using technicals, because I think technicals work really well with cryptos. This is still what's happening, right? You can see we had our break, expect a lower high, so expect another lower low. I'm not sure where it'll go down to. Maybe we will come back down to 6,000 or 5,000, but that's what I'm expecting. So again, I know I seem to say this every week, but we are actually at a pivotal sort of area here for the markets, in fact for the world. So let's see, will we break above and continue higher? Will this be based on some sort of Trump tweet telling us, hey, look, a deal's going good, I just got off the phone with President Xi? Or will we see this 2,800 level be taken out and see some more downside? So just be patient on some of these trades. Be careful, follow your rules, follow your criteria, and happy trading.